Hello friends, welcome to Accountancy Point. Today we are going to discuss about the third part of Goodwill concept and valuation. We have already done two previous videos based on the concept, and the second video was based on the average profit and the weighted average profit method. Today we are going to discuss about the super profit and the capitalization methods of valuing goodwill. Let us see, before we move ahead with solving a sum, let us understand it with the help of the steps which we need to follow in order to calculate the goodwill by super profit method. The first step is to calculate average profit. Children, you have already seen in the previous video, in the second video, how to calculate average profit. Still, I am using the formula sum total of net profits of all reported years divided by number of reported years. You can also say the sum total of the corrected net profit of the reported years. After finding the average profit, your second step is to find out the normal profit. Now, what is normal profit? Children, you can take an example of an industry and an organization. Industry is like Iron Steel is an industry. Tata Steel is a company. So, in under one industry, there can be a lot many companies and organizations working. Now, for a normal understanding, any organization who will enter into the market will earn a normal profit. That means any company, XYZ, any company, if it enters or a partnership firms enter, it will earn a normal profit with a normal rate of return. But when there will be an organization with efficient management, so that organization will be able to make extra profit. So the difference of the excess profit or the extra profit is referred as the super profit. So here is your second step to calculate normal profit. Capital, the formula is to calculate capital employed into normal rate of return divided by 100. After calculating the normal profit, we will find out the super profit by using the formula average profit minus normal profit. And the fourth step is the amount of goodwill is equal to number of years of purchase into super profit. Now, children, over here there is a term which has come, that is capital employed. Let us understand what is capital employed. Children, capital employed in a rough is known as the capital of any organization which is invested in the assets of the organization. In the assets of the organization. So over here we have three formula. You can use any three of them in order to calculate based on the various instruction and information given in the question. The first one is non-current assets. Non-current assets like land and building, plant and machinery, furniture, fixtures, all these are your non-current assets, minus non-trade investment. This you have to pay a lot of attention towards the non-trade investment. Investment, if not instructed in the question, will be considered as non-trade investment. What is a non-trade investment? A non-trade investment is an investment which has been made outside the business organization. For example, you can take that you have bought the shares of some other company or the debentures of some other company. That is called non-trade investment, which is not a part of your capital employed. So while calculating capital employed, we will take into consideration non-current assets minus non-trade investment plus working capital. Working capital means current assets minus current liabilities. Second formula, if you are not provided the information regarding the fixed assets or the non-current assets or other current assets and current liabilities, you can use the second formula, that is the shareholders funds. Shareholders funds in context to a partnership, you can say that capital of all partners plus reserves and surplus plus non-current liabilities minus non-trade investment. Third formula which you can use is the other way, that is fixed assets. We are only taking fixed assets plus trade investment What is a trade investment? A trade investment is an investment which is made within the organization, like the amount of money which you have invested for buying the raw materials, the stock, that is your trade investment, plus working capital. So these are the steps using which you will be able to calculate super profit. Now, let's come to the various steps which we need to follow to calculate the goodwill by using capitalization of average profit. Step 1, we will calculate average profit as usual by using the same formula. Second step is to capitalize value of average profit. That means we will convert our average profit in the form of a capital. So we can use the formula average profit into 100 by normal rate of return. Third step is to calculate capital employed. How can you calculate capital employed? You have once again these three options which you can use to calculate your capital employed. And the fourth step is the amount of goodwill of the firm, that is capitalized value of average profit minus capital employed. So these are the four steps using which you will be able to calculate the goodwill by using capitalization of average profit. Now the same should be used for capitalization of super profit. Now, in order to do this, your first step will be to calculate average profit. As usual, the same formula will be used to calculate average profit. Second step will be the normal profit. Formula is capital employed into normal rate of return by 100. Capital employed, once again, you can use those three formulas to calculate capital employed. Third step is to calculate super profit, that is average or actual profit minus normal profit. And fourth step is the amount of goodwill of the firm by using the formula super profit into 100 by normal rate of return. Now children, these all three methods will be used with the help of a question, and see how to calculate goodwill by using all these three methods. See, this is the question. X and Y are two partners sharing profits and losses in the ratio 3:2. Z is admitted with 1/5 share in future profits. For this purpose, goodwill of the firm is to be valued using the following information. First, you are provided with the profits of past 5 years. Capital of X is rupees 1,50,000, Y 2,50,000. General reserve is 1 lakh. Rate of normal return is 20%. You are supposed to find out the value of goodwill of the firm on the basis of 3 years of purchase of super profit of 5 years, capitalization of average profit method, and capitalization of super profit method. Now let's begin from the first condition. That is, our first method is by using super profit method. So children, in order to calculate the goodwill based on super profit method, we will follow all the steps which we had discussed. First step is to find out the average profit. The formula to calculate average profit is sum total of net profits reported divided by number of years reported. Now if you find out the average profit, the profits of the various years are like 80,000 of the first year, plus second year it is rupees 1 lakh, third year it is rupees 2 lakhs, fourth year it is rupees 1,50,000, and fifth year it is rupees 2,70,000. So we'll divide it by 5. The average profit, which will be rupees 3,80,000 plus 4,20,000. So it is rupees 8 lakhs divided by 5. Rupees 1,60,000 is your average profit. So first step is done. Step 2, you are supposed to find out the normal profit. The formula to calculate normal profit is capital employed into normal rate of return by 100. So before we calculate the normal profit, we are supposed to know the capital employed. Now, as per this question, the information which are provided in this question in order to calculate your capital employed will be where we are provided with the capitals and reserves of the organization. So we will use the formula shareholders funds, shareholders funds plus reserves and surplus plus non-current liabilities minus non-trade investment. So in this question, for the shareholders funds, children, we will add the capital of both the partners, which is rupees 1,50,000 plus 2,50,000 plus reserves is rupees 1 lakh. We don't have any non-current liabilities provided. We are not provided with non-trade investment also. So our capital employed will be rupees 5 lakhs. So our normal profit now we will be able to calculate. Normal profit is equal to 5 lakhs into normal rate of return, which was mentioned in the question as 20%. So 20 by 100 is equal to rupees 1 lakh. Now we will calculate the step 3, that is super profit. Super profit is equal to average or actual profit minus normal profit. So average profit is rupees 1,60,000 minus normal profit is rupees 1 lakh. So the super profit is rupees 60,000. Now step 4, we will find out amount of goodwill. The formula to calculate amount of goodwill is years of purchase. So in this question you are asked to use 3 years of purchase. So we will write 3 into the super profit, that is rupees 60,000. Rupees 1,80,000 will be the amount of goodwill using the super profit method. Now we will continue with the same sum using the capitalization of average profit method. In order to calculate goodwill by using this formula, if you remember, the first step was to calculate the average profit. So just now if you see, children, we have calculated the average profit at rupees 1,60,000. So I am not repeating it once again, I am just writing it over here. Average profit is 1,60,000. Step 2 was to find out capitalized value of average profit is equal to average profit into 100 by normal rate of return. Average profit, as we have written over here, is 1,60,000 into 100 by 20 is the normal rate of return. So our capitalized value of average profit is rupees 8 lakhs. Step number 3 is to find out capital employed. Children, just now in this particular, while calculating super profit method, we calculated the capital employed and the amount was rupees 5 lakhs. So I will use the same capital employed here also, rupees 5 lakh. Step 4 is to find out the amount of goodwill. Amount of goodwill is equal to capitalized value of average profit minus capital employed. Now if you see over here, the a capitalized value of average profit was rupees 8 lakhs and the capital employed is rupees 5 lakhs. So your amount of goodwill will be rupees 3 lakhs. Now we will solve the same sum with the help of capitalization of super profit method. This is the third method of finding goodwill by using capitalization of super profit method. In order to do this, once again we will follow the steps which we had discussed. The first step is to calculate the average profit, and to calculate this average profit we had discussed the formula sum total of net profit reported divided by number of years reported. Over here we will add the profits of all the 5 years which are mentioned in the question. Rupees 80,000 for the first year, rupees 1 lakh for the second year, rupees 2 lakhs for the third year, rupees 1,50,000 for the 4th year and rupees 2,70,000 for the 5th year, divided by 5, rupees 1,60,000 as we had calculated in the previous method. So this is my average profit. Second step is to find out the normal profit. In order to find out the normal profit, the formula is capital employed into normal rate of return by 100. Now before we calculate the capital employed, we'll find out the capital employed, though in the previous method we had discussed, but that is rubbed off. So once again I'm explaining that in this particular question we are provided with the information of the capitals of both the partners and reserves and surplus. So we will use the formula shareholders funds plus non-current liabilities minus non-trade investment. So over here shareholders fund means the capital of the partners 1,50,000 plus 2,50,000 plus the reserves which we have is of rupees 1 lakh, and we are not provided with any information regarding the non-current liabilities and non-trade investment. So my total capital employed will be rupees 5 lakhs. So I will calculate the normal profit now. Normal profit, while I'll substitute the value, it will be rupees 5 lakhs into 20 by 100 is equal to rupees 1 lakh. Now with the help of this, we'll go for the third step, that is to find out the super profit is equal to average profit or the actual profit minus normal profit. Over here the average profit which we calculated was rupees 1,60,000 minus normal profit we calculated at rupees 1 lakh. So our super profit is rupees 60,000. And now the last step which we will use, step number 4, is to find out the amount of goodwill. Amount of goodwill is equal to, using this method, we have the formula super profit into 100 by normal rate of return. Super profit which we calculated was rupees 60,000. So I will write 60,000 into 100 by normal rate of return mentioned in this question is 20. So if you calculate, it will be rupees 3 lakhs. So this is the third answer for calculation of goodwill by using the super profit method. I hope this video will help you in understanding the concept and solving the sums based on goodwill. Goodbye.